You are watching Market Watch, the brief overview of the key events from the world of finance. Global stock markets showed declines on Friday, with Japanese equities among the weakest performers. The Nikkei index is on track for its worst week in 3 months, driven by the yen strengthening amid expectations of a Bank of Japan rate hike next week. In the US, S&P 500 futures pointed to a slight increase after the index fell 0.2% in the previous session. These moderate losses followed a 1.8% jump on Wednesday, the biggest daily gain since November 6, fueled by strong bank earnings reports at the start of the new earnings season. Markets are expected to remain cautious heading into the weekend, with Donald Trump's inauguration scheduled for Monday. On the currency market, the dollar weakened alongside falling bond yields, reflecting reduced concerns about persistently high or accelerating inflation. The yield on 10-year U.S. Treasury bonds hit its lowest level since January 6 on Thursday after Federal Reserve Governor Christopher Waller suggested that 3 or 4 rate cuts could occur in 2024 if economic data softens. Traders now view the Fed's June meeting as a likely point for another 0.25% rate reduction. Japanese 10-year bond yields also eased, mirroring the movements in U.S. Treasuries. However, comments from Bank of Japan Governor Kazuo Ueda and Deputy Governor Ryoso Himeno have raised the likelihood of a rate hike on January 24 to 79%. The yen climbed to a 1-month high of 154.98 per dollar, while the U.S. currency weakened amid expectations of earlier Fed rate cuts. The dollar index, which tracks the greenback against 6 major currencies, fell by 0.06% to 108.90. The euro held steady at $1.0308, and the British pound remained unchanged at $1.2237. Oil prices rose on Friday, heading toward a 4th consecutive week of gains. Investors are closely watching for potential supply disruptions ahead of Donald Trump's inauguration on Monday. Positive demand expectations also supported the oil market. Additionally, hopes for Federal Reserve rate cuts increased following the release of data showing slowing inflation in the U.S., the world's largest economy. Inflation is expected to continue easing, potentially allowing the Federal Reserve to reduce rates sooner than anticipated, Federal Reserve Governor Christopher Waller stated on Thursday. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.